Welcome to Limit Up, the weekly capital market podcast. My name is Don Collins. I'm a chartered accountant and business advisor of 30 years and a partner at Findex, a leading financial advisory and accounting services firm based in Australia and New Zealand. I'm here today with Ian Reynolds, trader and investor, former bank foreign exchange market maker, early investor in Bitcoin and tech founder. Ian, welcome again to this week's podcast.
Thanks, Don. Great intro.
This week, we're going to talk through the last week where gold and silver we saw blast off and I think have hit some all-time highs. Equities are still rising. I understand from the US perspective, there is some confusion in the numbers and where the economy is going. Sturmer issued the UK budget last week and the FOMC will release on the 10th of December. We'll go through your charts, which is always a fascinating piece, where we'll see gold and silver resume, the 10-year Japanese government bonds and where they're at, and also the USD yen pause in value.
Sure.
Over to you.
Yeah, so this week has had, big blast off on Friday with silver leading gold. So silver hit the all-time high in 5,000 years of human recording its value.
Right.
And then the conspiracy theorists were amazed to find that the Chicago Mercantile Exchange turned all the servers off, so the futures contract wouldn't work.
Right.
24 servers, I think it was. Who knows what happened. But it went just as the time before London came in, when things went really super liquid.
Right.
So that calmed things down a bit, but made things a bit more interesting. There's rumours of that someone's trying to corner the market, like Bunker Hunt did in 1980.
In both markets or just the silver?
Just silver.
Just silver.
Bunker Hunt was an American oil guy. Him and his brother tried to buy all the silver in the world in 1980.
Right.
And would have succeeded if they hadn't changed the law against the way he was building his position. He went bankrupt.
So
anyway.
Nothing stopping someone else, or?
Yeah, you can't own more than 25% of the deliverable silver. I don't think anyone really understands how that's meant to work. But certainly, interesting times are coming if we're getting speculation like that. So supposedly China has a massive problem getting silver because it's short of it and it's in everything.
Yep.
Unlike gold, which you can pick and choose your moments.
Sure.
Maybe India has a need with jewellery or whatever.
Yeah.
But certainly with silver, it's become a big issue now. And we'll go through the charts in a minute.
Yep.
US economy, all these numbers coming out now. Do they mean anything? Have they been fudged? Who knows? Who cares?
Yep.
Really, not going to get non-farm payrolls, which is the most important employment number, which is obviously what the Fed's looking at.
Yep.
For October. So that's just got cancelled.
Okay.
No conspiracy theorists there, obviously.
No, absolutely not. Didn't like the numbers, so we won't tell you. Is that
something like
the message?
That, yeah. So we'll wait and see with that. But, Fed is flying, totally blind.
Yep, which isn't a great position to be in for a government.
Well, not when you've got to justify it to the president who wants you to do something very specific.
Sure.
And you have nothing to back up not doing it.
Yes.
So they're really in a corner. UK budget came out last week. Yeah, Mr. Starmer and Ms. Reeves. It was better than expected in that there weren't any disasters, but really the background is pretty gloomy. Lots of people leaving the country because of high taxes.
Yep.
And it just turned into a bit of a non-event. Gilts and sterling rallied a bit, but doesn't change anything. And, we're on hold for the FOMC on the 10th of December. RBA is inconveniently a day before, on the 9th of December. So they have to actually make their own mind up on something.
Yes. And not rely on seeing someone else's numbers.
That's right. And economically, they should be hiking rates.
You talk in the US?
No, in Australia.
In Australia. So didn't know which one you're referring to there.
My mistake. Will they hike rates? Absolutely not. Will they cut rates? Probably. Into another policy mistake. But, I have to deal with that when we get to it.
Yep.
Would you like to have a look at the charts?
Always good to see them. Let's see what actually went through last week.
Here we are, Don. So let me just take us back. Bitcoin has had a bit of a stumble today on the back of the yen, which I'll show you in a minute.
Sure.
We hadn't, if you remember last week, we were looking over the abyss. So we've had a pretty decent rise from 80 up to 92.
Right.
Maybe it's 93. No, 92.
92. Yeah.
And now we've really rolled over hard this morning.
Yeah.
So
that candle there is that today's
this
trade?
one, yeah.
Yeah, that last red one.
The live one today, yeah.
Yep.
Silver, as we talked about, chart's getting a bit messy, I must admit. But you can see that we broke this key trend line here, and you can see the reaction to it. So trend lines work. This wedge pattern here was constraining the price, so it had to break one way or the other. It broke upwards. This would kind of suggest that we're going to see 60 to 62 by the time we get there fairly soon. And
we've already hit an all-time high.
Yeah, so the all-time high before 17th of October was $50 in 2011.
Mm-hmm.
On 17th of October, it was $54.
Yes.
And today we've hit just shy of $58.
Right. We'll see.
Yeah, we will. Gold, fairly similar thing. The wedge had to break.
Yep.
Not quite so positive because we've got some levels 4,240 get through before we get to the all-time high at 4,380.
Yes.
And we'll look at the longer-term charts in a minute without all this day-to-day stuff around.
So just a comment, because you've shown us Bitcoin, gold and silver, that there seems to be a definite move towards gold and silver, quite obviously away from Bitcoin, so to speak.
Well,
and I don't know if they're related, but I'd be interested in your, observation.
I think Bitcoin is more related to the rollover in dollar yen.
Okay.
Because you borrow the carry trade which has been going on for at least decades, is you borrow yen really cheaply because the rates now are 1.8, 1.87, but only a year ago. Let's take that point. 75 basis points a year ago, and down here, naught, basically. So it's been zero forever. So people, hedge funds, etc., have been borrowing yen to buy US assets, Bitcoin, whatever, because they can finance it cheaply and leverage it up.
Yep.
As that unwinds,
yes,
obviously things fall out of bed. And if you remember 3 months ago, there's a big unwind where the Japanese stock exchange dropped 15% in a day.
Right.
Again, went straight back again.
Yeah.
So lots of talking heads in the market going on about this. I'm not so convinced.
Okay.
But they might be right.
Okay.
So certainly you only need enough speculators to think it and the price is going to move in that direction.
Yep.
If it stays there is a different question.
Okay.
So
thank you for your insight.
Yeah, so dollar yen's rolling over.
Yep.
On the back of, and I think more relevant to the dollar actually being lower. So Fed cut rates of these 2 points, rates have gone up.
Yep.
And the dollar's gone up. We're going to get another one somewhere over here. Who knows what the rate will be, but it seems that every time they cut, rates go up and the dollar goes up.
Yep.
We'll see what happens. Anyway, it was weaker overnight. I think that's more to do, more influential on dollar yen and Bitcoin in itself.
Okay. What else happened?
So this is 10-year Japanese yields. We looked at that briefly just now.
Yep.
So, if we go back to the beginning of the move up, which is from March 2023, rates were 0.18%. Today they are 1.87%. And we've got a pretty solid trend, but you can see that's really breaking to the upside now.
Yeah.
And the market thinks this is a tradable asset. It's not. Most of it's owned by the Japanese government via the Bank of Japan.
Right.
Only certain entities can invest in it, can buy it, i.e. Japanese insurance companies, etc. People that need to put it on their balance sheet.
Yep. Yep.
So when they say, "Oh, there is a futures mark in it,"
Sure.
but it's all got to end up in cash in the end. So is that true that there's massive speculation and it's moving more? I'm not so sure.
Okay.
But they might be right. Certainly, it is definitely poking its head above that channel. That's for sure.
Sure.
Whereas more recently, US yields have been declining.
Yep.
Let me just pull this down here. So we broke out in the short-term channel. We couldn't get above immediate resistance. So
Yep.
we've gone back down to test it again, and now
Yep.
we bounced a little bit. This is the bottom of the 15-year trend.
Okay.
So you can see between here and here, it goes back 15 years. So to get through here is going to be a big effort.
Yep.
But if it does, it's going to go really a lot lower.
Right. Okay.
I'm really looking for the point at which the trend changes, because the world is short of dollars, and you can see just a big spike might happen.
Sure.
And here's some good points at which to buy it as you get support from the channel here.
Yes. Yes.
Added to support from this channel.
Yes.
So double support if you like.
Yep.
In stock markets, this is the S&P 500 daily, and I can't see it's going anywhere.
Okay.
It's had a good bounce.
Yep.
From the repeating gloomers who insist that we're going to have a market crash tomorrow.
Yes.
Which never happens.
Yep.
And they've been saying it longer than I can go back on this chart, right?
Okay.
And one of this was created by Trump and tariffs.
Yep.
But really, you got to say it's hard to get, if you're into a long equity trade. Sure. It's hard to get off it because you've had such a massive run.
Yes.
The price is to some extent irrelevant if you've had it for a few years.
Yep.
And why would you get off when it keeps bouncing back?
Yep.
And all stock markets look like there's some more positive, some less positive, but they're all at or around the highs. And the same story, really, why get off it.
Okay.
There's a bit more context around this week's stars is silver. So this is the monthly chart. So you can see it's absolutely massive, this candle here.
Yep.
And the more you go back, if I can push that down a bit. This low here was $13, which was in 2020.
Mm-hmm.
So after the spike down for COVID, and big rally upwards as markets crashed, flight to safety, and this big bottoming pattern. And when it broke through that line, it's gone absolutely nuts.
It has. Over several months there.
Yeah, 6 months, fairly similar for gold, but a lot cleaner. This is the 9-month average. And you can see as we go up, it's barely getting near it. Yep. So we are quite away from it. This was obviously too far from it at this point.
Yep.
And we are still quite a way above it. But, hard to short that market.
Okay.
That's about it for the charts this week.
Right.
Thank you.
All very interesting again. What's coming up this week?
Numbers wise, in the US, core PCE on Friday.
Yep.
Supposedly what the Fed looks at. Can't think with all what's happened with the government shutdown that it's going to be listened to by many people.
Sure.
ADP more interesting. This is a number that has never had any interest in it because it's all the private jobs.
Mm-hmm.
But when you don't have any public jobs, that's all you can look at, right?
Yeah, exactly right.
And is perceived, and probably is actually impartial to who's in government.
Sure, it'll happen regardless. Yeah.
Yep. So no bending the rules there.
Nope.
And really, we've got a week of bracing ourselves for the FOMC.
Yes.
On the 10th.
Yep.
And the week after, Bank of England, Bank of Japan. So it's really all things happening before Christmas. Quiet time at Christmas.
Yes.
Get your hard hat on for the 2nd of January.
Yes. Very good. Very interesting week again, and really enjoyed your insights there. So thanks again,
Thank you, Don.
and look forward to everyone tuning in for next week's podcast.
Yep. See you next time.
Thank you.